Hey guys, Taylor the Gamage here, coming at you with a 5-minute recap on July 1st, 2025. So today, as everyone knows, there was a massive iron condor structure in place. We're talking specifically about SPX 0 DTE. And so those were a massive goalpost for the day. Obviously, as we can see, price more or less chopped in the middle of that, topping out at 62.10, which is the top of our drunken sailor range with the key transition zone. And so with that, let's get in our pre-market prep, how we got those levels and what our intraday tools were telling us. Just before we get going, I want to show you two things. One, most mornings we have a pre-market prep on YouTube. Today, it was 25 minutes long. We went through SPX, 0DT full complex, went through probably 10 or 15 different single stocks as well. So around 9 a.m. Eastern Standard Time, come join us. We normally send an email out to our email list when that is going live. Then second thing is GammaEdge.us. Go to our blog. There's a ton of articles that we have on our blog that we've written this year. As we're going to go through things like transition zones, what I hit on earlier, we have a whole article dedicated to that. Intraday volume tools, market trend model, SPX-A versus SPX-P, our pre-market game plan. Everything is here. Feel free to give that a read, and keep in mind in the coming days, we're going to be launching a new kind of all-encompassing course for you guys as well that kind of walk you through our methodology and our tools in a logical path that's, very plain English, digestible. Most importantly, every single lesson kind of has an actual takeaway that you can implement in tomorrow's trading session. So having said that, you guys can go watch our YouTube live from this morning. First thing we hit on is SPX 0DT, but we can review that really quickly here. Again, iron condors, those are in the teal boxes. We have our drunken sailor range in the orange box. And so, all of this is to say within the orange box, we're not super enthusiastic about trading because of the general nature of it being choppy price action. Having said that, one thing that we did note in our pre-market note in the Discord, just showing you guys that real quick, we have a very kind of all-encompassing note, key strikes, what we expect to happen at key strikes, if-then statements, all that good stuff, help you develop a pre-market trading plan. You can check that out. But one of the scenarios we had was obviously, going to the top of the drunken sailor zone, going to the bottom of the drunken sailor zone. The reason we were focused on the bottom of the drunken sailor zone is even where we opened to start the session. And one of the scenarios we had was 51.75 holding and seeing a reflexive move back to the upside. That is more or less what we got. And so the play there, and the play always is if we get a reflexive move off the bottom of the zone, we expect that to go back to at a minimum, or not a minimum, but the first key test is the top of the drunken sailor range. And if we get to the top of the drunken sailor range, generally that's backed by significant intraday volume, and we would see a progression higher. In this case, we would have expected to go to the top end of our goalpost, which is the top of the iron condor structure. And so again, just to replay that back to you before we leave this and go to the charts, kind of top upside zone, the iron condor, bottom zone, iron condor, in between, expect fairly choppy action, but the price of path is important, We are opening down here. So if we got a, supportive bounce here, first target 6,200, reason being, A, kind of the distribution and speculation, there was meaningful aggregation at that strike. B, it's a whole cycle level. And then 62.10 was the next key strike there. That was actually the top of our drunken sailor range, just given the gradient or the build out in speculation. That is a key level that we need to overcome. And then we were saying above 62.10, we can see there's hardly any puts in the complex at that point in time. So really that fear part from the put speculators of them closing out their positions, helping us propel us higher, just isn't there. So that's where we need to see that intraday volume. And newsflash, we did not really get that. So first, just going back to the chart really quick, had a little bit of a push, failed at 6,200, not crazy in key psychological level. Found support more or less. It's at the bottom of the iron condor. These are not precise levels per se, like they are zones. So if you're looking for a to the penny touch, which we often see, that wasn't necessarily the case today. As an example, kind of given the lack of the direction, we held down here at 61, 80, 75 or whatever. Once we overtook the opening print, I actually took a speculative long, hoping for a push back up to the top of the drunken sailor range, and then maybe it'd be sweet if we would have gotten all the way to the top of the iron condor structure. And if you notice how strong RSP, which is equal weight SPY, was today, hoping SPX was maybe going to catch a little bit of that momentum. Let's just go to the RSP real quick. You can just see how that absolutely just ripped all day long, and not so much in the SPX. But nonetheless, right, it took a little bit of profits up here at 62.10. In hindsight, wish I took a lot more. I was hoping for a move higher, and then the news, kind of Trump news, stopped me out. But still was a fine trade on the day. But anyways, not the point. The point is the key levels, kind of how price interacted with those levels, and then getting into our intraday volume analysis starts with our market trend model, right? The intraday cumulative tick, specifically when we're talking about intraday SPX trading, fairly flat to a little bit higher. Looking at the filtered tick, not a ton of action today. So net, kind of flat. But the bias was higher on kind of a longer term swing trading, multi-day, multi-week basis. This is a constructive look to see. However, there are a lot more factors that go into kind of the multi-day to multi-week swing trading, aside from just the cumulative tick, which is what we got into in our pre-market prep, like our GEX ratio, delta balance, all that good stuff, which showed that the market is a little bit overheated at this point in time. So maybe not the best spot to be, deploying, meaningful amounts of capital when we're at all-time highs and we've just ripped from the lows. And the last tool we're going to talk about when I reference intraday volume analysis, this is kind of what is the kind of visualization of that. This is SPX 0DT volume, looking at the distribution aggregation of SPX calls on the green line, puts on the red line. What we do is on a 5-minute over 5-minute basis, we aggregate call and put volume. We find the distribution, the middle point of that distribution, which is a centroid, and we plot that centroid throughout the session on a 5-minute basis. We connect the dots and we form these solid green and red lines. And as we start to get those lines and they build out over time, we're able to use those in two ways. One is from the open to whatever point in time we're looking at, we can understand what the character of price action is by those centroids, meaning choppy, like today. Perhaps we have trending higher, we have trending lower. So again, today clearly choppy. Again, which kind of tells us that a lid was put on the market. We weren't seeing an expansion higher in call speculation, which is generally what we need to see. We want to see a ramp higher. So kind of topping out at 210 where we did made a lot of sense, just because we didn't really see a lot of speculation building out past that level. And the second thing what it tells us is, all things equal, if we know what the centroids have been doing from the open to a specific point in time, we can project out, all else equal, where that centroid is going to go through the close. And that helps us to project price path through the close, because price follows transactions, it follows the centroids. Or another way to think about it is, price is not going where transactions are not transacting. So if you're a credit spread seller, that's very useful to know where price is likely not going to go. And so, right, I just want to show you as an example of how you use this intraday. So this is exactly what was printed out at 12:45 Eastern Standard Time. You can see the path of the call centroids, path of put centroids. So this is just very classic choppy price action, which is exactly what we got. You can see how we're projecting out where those centroids are going with our lines of best fit, which are the dashed lines. So again, showing you from the open to 12:45, very choppy price action, choppy centroids, and through the close, we are expecting choppiness as well, which is more or less what we got. And so with that, that's all I got for you guys tonight. Hopefully it's clear how we went from our pre-market prep and those key levels to trading that intraday using our just kind of price action and interaction with those levels, and then B, our intraday tools, specifically the market trend model and the intraday volume analysis. So with that, appreciate the time, and we will talk to you all tomorrow. Thanks. Bye.